was a time when the stock market was a really good proxy for the economy. And then I think over a period of time, it actually became something of a harbinger, right, of the economy. And then we started saying, hey, it's telling us what the economy is going to do 6 months to a year out. But now it just feels like the whole thing is disconnected. I mean, for instance, this LEI report I mentioned earlier, leading economic indicators down 23 months in a row. But look at this. I mean, historically, going back to 2000, so the LEI, leading economic indicators, go south and the stock market goes up. It happened in 2000, it happened in 2007, and it's happening once again. What's going on? I want to bring up Bell Point Chief Strategist David Nelson. David, I mean, just first of all, how much of this disconnect do you buy into? And how do you work around it when you're trying to figure out where you want to be in this market?
I don't. It's one of those leading indicators that works right up until the time that I use it. You know, I have to focus on something a little more tangible than that. So I focus on the individual fundamentals of the companies I own. So
not too concerned macro then as much.
No, I mean, I think there are investment themes out there that are pretty powerful that go beyond what's happening on the macro level.
Right. I always tell people too, like, in a $25 trillion economy, someone's going to be making money. Someone's going to be doing extremely well in that sort of environment. I want to ask you then about something else that I find intriguing. I started the show talking about the enthusiasm on Wall Street. Just now, another firm upped their target. So we had two firms in the last 24 hours. And Wall Street's sort of playing this catch-up game. I find it to be really intriguing because they spend so much time dissing retail investors. Goldman recently put out a sentiment poll. We're going to put it on the screen here, where bullishness spiked over the last couple of months. I mean, I'm a contrarian when it comes to Wall Street. And when Wall Street starts getting really bullish, I start to get a little antsy. I don't sell automatically, but I do start spying the exits.
The hysteria is on both sides of the trade. You got one side of the trade is saying the market's going to Pluto, and the other side is calling for a crash. It's really that diverse at this point. Analysts always end the party. You know, look at NVIDIA. You've got analysts out there that have upped their target to 1,000. You've got one person out there at 1,200. I own this stock going into this number. This is a fabulous company, but very, very difficult for any company to live up to some of the expectations that have been put out there.
Right. And I always tell the people I think it was 2007 or 8, January issue, Forbes magazine, Company of the Year, NVIDIA. Yeah. Split adjusted, it was $12. By the end of the year, it was $1. And it stayed there for 10 years. But it's only like up 50 gazillion thousand points since then. Let's talk about some opportunities now. You're actually spying emerging markets, but with a twist, because I want to let the audience know, emerging markets every January, everyone loves them because they've underperformed for the 15th year in a row, 16th year in a row, 17th year in a row, 11 PE versus 21 PE for us. For people who use those metrics, it looks juicy and tantalizing.
There may be a way to make some money in this trade finally. You know, China has always been, it's uninvestable for me. As long as Xi is in power, this is a hostile state that is anti-capitalist behavior. But now you can do that in an emerging market ETF, ex-China at this point. And look at the spread in performance.
What's the symbol on that?
EMXC. EMXC. And look at the spread in performance. In the last year, you got a 1,200 basis point spread. So if you're going to put money overseas in a trade like that, I'm not putting a lot of money there, but I think that's a place you
I love that idea. There was a time when I used to tell folks, don't play emerging markets, just buy China, which at one point was like 90% of EM, right? I mean, China was the straw that...
It's already shrunk down to 23%.
That's mind-boggling.
Yeah,
that's mind-boggling.
It is.
You also like Capital One here?
I think this is a home run trade. I think this is a really smart move by them. They're taking out one of the largest competitors out there. The combined entity is going to be bigger than JP Morgan in this category. This is a home run trade, and they recognize the political landscape that a year from now, we could have a very different looking FTC.
Speaking though, would a Biden administration even let this go through?
They're not, but who's to say? Who's to say that they're going to be here anymore?
Yeah, I know Trump administration would, because they want this sort of synergies happening. So 30 seconds. What's your most fearful issue with this market?
The biggest risk for the market is elevated rates, commercial real estate, and the regional banking index in that order. If they keep rates where they are right now, we're going to have a market accident.
All right. David, my man, great seeing you.
You're the man.
Listen, you got to send in a new picture, man. The picture that we had of you coming into this promo was horrible. I'm going to apologize to you right now.